All right, everybody. I hope everybody's having a great day. I hope everybody had a great weekend. Man, it's good to see you guys again. Yeah, man. I mean, hey, it's another day, another dollar, as they say. Welcome to Money Maxxi. Every Mondays and Thursdays at 7 a.m. Eastern. You know we got to meet and talk about all things money. The Monday session is usually when we look at some like upcoming trades, look at some setups and things like that, so that we can get our money right for the rest of the week. All right, I'm really excited for this upcoming week. I'm excited. Actually, maybe not this upcoming week, but maybe for the next next couple of upcoming weeks. You know what I mean, man? I think there's going to be a lot of opportunities in the market. And so I'm definitely looking at different opportunities where we could try to capitalize on some of these big market movements. There's a lot of volatility in the market right now. And we might as well like try and take advantage of it if we can. So yeah, I'm kind of excited to see all that. I just need to make sure that our live stream is actually streaming, and at the moment I don't really see it. Yes, I do. Okay, so let me just get this. There we go. I just had to get my charger out. All right, so yeah, I mean, let's just like recap like what we got going on for us, okay, right now. Okay, let's recap all of our positions. Well, I'm gonna recap my positions. And you guys, I know, I always say this in the beginning of every stream. This is not financial advice. I'm letting you guys know what I'm doing and what my thought process is. And if you guys want to like follow along, that's on you. Okay. That's on you. But this is all education and entertainment purposes only. So keep that in mind, guys. But yeah, right now, I'll tell you some of the positions that I have right now. Of course, my main position, my biggest conviction is still Brazil, EWZ. And right now we're seeing Brazil and overall risk assets are going up since Friday's close. So that's nice. Although remember, I don't know if you guys remember last week, but last week we were talking about, yeah, we were talking about, pullbacks. And if we see a deep enough pullback, we're going to try and get some more EWZ leap calls. And right now, here, let's go to the EWZ option chain. So what I'm talking about, when I'm talking about leap calls, what I'm talking about is long dated leaps. It means that leap stands for like long dated. Man, you know what? Leap options acronym. I forgot what all that letters stand for, but it's something like long-term equity anticipation securities. That's what LEAP stands for. Long-term equity anticipation securities basically means longer dated options. Options that are usually dated over a year are what we refer to as LEAPs. All right. And that definition is really, really loose. Some people are like, oh, if it's over 6 to 9 months, they call it a leap. So it's just anything that's longer dated. It's not like next week or a month or something like that. It's longer dated out. So right now, what we're accumulating is just January 2028. That's right. We got 2 years. All right. A little bit less than 2 years now on these. And we were acquiring these from last year, end of 2025, mid to end 2025. And right now we're on those 40 calls. And if you guys go into the Discord, you can see like at what price I bought it at. I believe I got in at like around 250 or 275 or something like that. And of course, we've been selling covered calls. I think 250, 275 was our last buy-in, but I think our previous round before that, we were getting in under $2. And right now they're between $5 and $5.85. So we're looking for these where I want to get more of this. I want to get more of these. We'll see when it happens. I want to get in when EWZ is under $32, so around like $31 to $32. That's where I want to get these. Most likely around that price, I can see these 40 calls probably being like $3 or less. They're probably going to be like $2.50 to $3. And that's where I want to be really capitalizing and getting in on some more EWZ, okay? But I think that is going to take like several more weeks, because even with this whole Iran pullback, we just did not see prices pull back all that much in Brazil compared to like some of these other risk asset markets. So, I mean, it is what it is. It's surprisingly really, really strong EWZ in Brazil's market. I am looking for a bigger pullback, a bigger correction. Again, 31 to 32, I'm going to be buying those leap calls. But I mean, that remains to be seen. We'll see what happens. We still have a half position. I still have some covered calls against my leaps. So against my leaps, I actually sold some calls against it, some closer dated calls. I think I sold the June ones. Yeah, the June 2026, which are about to expire in about 2.5 months. We sold the 44 calls. If you guys remember, we sold these against our leaps. And that kind of a trade, that spread, when you're buying these longer dated calls that are closer to at the money, that are closer to like the actual underlying strikes. So right now, EWZ being around $36. So the 40 calls that are dated 2 years out, those are closer to at the money than these 44 calls, right? So when you buy a closer to at the money leap and then you sell these shorter dated calls that are further out the money, we call that a poor man's covered call, because you're long, but you're also generating income off of it. And so right now I think we sold those for $1.05 a piece. So we're up over 50% on those covered calls that we sold. So we're generating income off of that. So 50 cents off of $2.50. That means we just in the last like month or two, we generated about 20 to 25% income off of our position. So again, guys, like, and I've been getting a lot of messages about this. Some people have been watching our Money Maxxi stream, and some people have been saying, well, you're talking about increasing alpha, increasing that rate of return above average market returns. And they're saying, well, you using 20-25%, how are you generating those returns? How can you say, Rooster, that you can generate those returns? Well, I'm showing you. I mean, even our covered call writing off of our EWZ position generated about 25% income off of our principal that we have for the last 2 months. So just the last 2 months, the income we generated off of the EWZ calls has been about 20%. And add to that we bought those EWZ leaps at under $2 all the way up to $2.50. And then right now they're already at $5. We took profits at $5.65, $5.75. So we more than doubled just from holding on to these long dated call options for the last like 6 months or so. So we doubled just on the price appreciation, right? And on top of that, we're generating anywhere from 20 to 25% every 2 or 3 months on income off of that. I mean, as you can see, that's how we generate that extra alpha. Now, of course, I'm not putting all of that on here, like where it says like the return. I'm not putting like 100% on there because I want to keep the expectations as reasonable as possible. But you can see, already you can see that these targets, like especially around 20-25%, is definitely achievable. Remember how on the last Money Maxxi, we talked about selling put options on SPY or on the S&P 500 index fund, right? We talked about selling put options, cash secured puts at levels that we'd be willing to buy shares at. Remember that? And we get paid to sell that cash secured put. Well, remember how I said if you sold an at the money 30 days out put option, whenever the VIX gets to 30, it's as close to as free money as you can get. Well, guess what? On Friday, we actually had the VIX at 30, and on Friday, and options trade Monday through Friday, 9:30 to 4. Okay, 4:15 for some of these index ETF ETFs. But as you can tell, but the point is that there have been no options trades since Friday's close. All right. So at Friday's close, the S&P 500 index fund, SPY, was, I think, around between $634 to $635 per share. So at the money at the time was around here, okay, around the 635, 635 put, 634, 635, right? So if you had sold puts at the end of day Friday, all right, if you had sold cash secured puts on SPY at the end of day Friday for 30 days out, expiring on April the 30th, you would have made close to $2,000 per contract. Let me say that again. You would have made $2,000 per contract just selling at the money puts on S&P 500 index fund, okay? Now, let's say 31 days from now on April 30th, S&P 500 closes above 634 or 635, you keep all that $2,000. So let's say this was all cash secured. Let's say you didn't use any margin. You used zero margin, okay? That means you would have had to have about $63,500 in your account to make it a cash secured put, but you would have earned $2,000 that month. Extrapolate $2,000 a month times 12, that's $24,000. Okay, let's just do a quick math here. 24,000, all right, divided by, what is it, 63,500? So if you do this every month, it's a 37%, it's 38% return annualized. So again, just for selling cash secured puts, when VIX gets to 30, you're making 37% annualized return just on that. Again, is 20% that far-fetched? No, it's not. Okay, if you're really working at trading, you should be able to achieve some of these numbers. Again, yes, you are increasing the risk and some of the volatility in your portfolio, but you're doing it in a risk managed way. All right, because if you were going to buy the S&P 500 index fund anyway, if you were going to buy it anyway, you might as well get paid to do it. And that's what selling these cash secured puts is all about. Okay. And I went over this in great detail, last week. I might even make a long form video on it just to make things easier. And at some point, we'll probably do some live trades on this as well. Of course, if you join the Discord, you get all those live alerts. Anyway, I do it all for free. I don't charge for Discord access. Oh, by the way, if you got any money questions, if you got any trading questions, if you got any investment, personal finance, whatever questions you want to ask me and you want to quote unquote call in, you can always join our Discord. We do have a VC on right now. I'm live in the VC there as well. You can join the VC and ask me some questions. You don't have to show your face or anything like that. It's just going to be your voice. But if you're not even comfortable having your voice out there on the internet, you can always DM it to me and I will answer your questions during the live stream. I actually already got like 2 or 3 questions for today. One of those questions actually over the weekend was, how are you so confident that people can generate this extra alpha, and the example that they cited was that 20% that I was talking about. So again, just from some of the trades that we talked about last week, if you sell at the money cash secured puts on the S&P 500, 30 days out, when VIX is closer to 30, if you actually look at the last 20 years of data, you would have never lost money on that trade. All right. And even if you don't get assigned those shares, you're still getting paid $2,000. If you annualize that, again, that's 37% annualized. All right. So without even going long, without even actually actually fully committed to a long position, you can still make 37%. Right? In our Brazil example, we're generating about 20 to 25% income every 2 or 3 months just off of selling covered calls on our leaps. So again, these are all examples of how you can generate extra alpha and not lose your shirt in the market. All right? Because what's the point and I'm very cognizant of the fact that it's not really about how much you make in the market. It's about how much you keep. All right? It's great and all if 1 out of 100 trades, you're swinging home runs and you're getting 10x, 20x, 30x. one out of every 100 trades, I mean, technically you could still make money on that, but you got to make sure that you're losing less on those 99 losses than on that one gain, right? So it's all about how much you can keep in this market. Even if you have a 99% hit rate, let's say like out of 100 trades, you actually make money on 99 of them, which is almost impossible. But let's say it is. All right, let's say it is, and let's say out of every 100 trades, you make 99. You make profit on 99 of them. Well, that does you no good if 1 out of 100 trades, that 1 out of 100 trade that you're losing money on. What if you wipe out your whole account like that? What if you lose 99%, 99.9% on that 1 out of 100 trade? All those winning trades from before doesn't mean squat. It doesn't mean anything if you lose it all in one trade, right? So again, it doesn't matter how good your hit rate is and all that. It's about how much money do you keep. Are you making more than what you're losing, right? Because wins and losses, you're going to get losses, okay? Nobody is a perfect trader, but you have to make more than what you lose on losing trades. All right. And you don't have to have you don't even have to have over a 50% trading hit rate. You can actually mathematically, it is proven you can be right only 25 to 30% of the time. But as long as you're making more than 4 times what you're losing on every trade, you will make money in the long term with that strategy. All right. So it's about how much you keep, not necessarily how much you make. So always remember that when you trade. All right. Keep your losses small and keep your winners running. All right. Speaking of which, I'm gonna have to be honest. All right, let's go back to some of these trades here. Hold on, give me 1 second here. I think I messed up the sizing of this. There we go. Okay, so if you notice on Friday in the Discord, we did have a few trades. So I did go long the S&P 500 like in the middle of the day on Friday, but I kept it really, really small. I did get liquidated from it. And if you read the Discord, I even told you guys, keep it small because you just don't know, and I said, whatever my liquidation amount is, that's the amount that I'm willing to lose. And I think I lost like $100 on this. Okay. And remember, guys, this is the Trade XYZ hyper liquid account. Remember, we started this with just a little token dust that I had in some of my MetaMask wallets. I think we started this with $300. So yeah, I lost $100 on the S&P 500 long trade. Fortunately, though, the gold trade is doing well. I lost less than what I gained on that initial take profit. So even though I think we started at $300, so even though I took that $100 loss, I'm still more than double when I started this account last week. So just in the last week, we doubled this account while taking a loss. So we made money on one trade, we lost money on one trade, but we're double, right? Because I am making more than what I'm losing, okay? So again, you can be like 50-50, right? You can be 50-50. Sometimes you're right, sometimes you're wrong, but as long as you're making more than what you're losing, you'll always be making money as time progresses. Actually, Trade XYZ does not have a very good profit and loss UI as much as like Hyperliquid. So we can actually go to Hyperliquid at Trade XYZ. You can actually, it's all linked up together. It's all linked up to the HIP3 or whatever. Everything is all linked up. So actually on here, you can actually go and view your P&L on the actual Hyperliquid website as well. So let me just see here. Where is my trade history? There we go. I think right here. Yeah. See, my P&L on this trade, on the S&P 500 trade, was minus $99. And again, I made the position size such that if I do get liquidated, I lose less than what I made on the gold trade. If you look at the gold trade, guys, I think we made $123 on that half profit on gold. And I gave most of it back on the S&P 500 trade. So that, see, again, position sizing. I practice what I preach. I told you guys, we're going to have a lot of volatility. make your position sizes smaller so you could withstand more volatility and you could take a loss and not like ruin your day over it. Okay. So remember, I told you guys that when volatility increases like that, when you have all this like headline risk and everything like that, you want to start diminishing your position sizes. I kind of wish I gave myself a little bit more room because now the S&P 500 is curling up. It is what it is. We still have a little bit of those, like I did a few like option spreads on SPY as well. So I do have a few bullish like positions, like not much. Again, I kept it very, very small because this is a counter trend play. Remember, we talked about bear market rallies. This could be, I'm not saying this is a bear market yet because we don't know for sure, but this could be a bear market rally. And so, I wanted to keep it small because timing a counter trend movement is extremely difficult. Okay. Timing that is extremely difficult. So I wanted to keep the position really small and I did. And this is just an example. This is not comfortable for me to be sharing my losses, but I do want to share with you this because I want to show you how risk management is done. Okay. So, and again, this is a small account. So you can always like scale this based on how big your account size is. Most of my assets are on my my interactive brokerage account rather than like on a DEX, like Hyperliquid. But again, you can just scale this based on, your own portfolio size. But what I always like to do is I always like to make it so that my loss on my potential loss on a trade that I take is less than the amount that I gained on my previous trade. Okay. I always try to position it like that because I always want to be making money. As time progresses, I always want my equity curve to be going up. All right. So that's one risk management technique that you could use is like structure the trade so that whenever you do get stopped out or when you get liquidated, you're only losing less than the profits you made on that previous trade. Okay, that's one method that I use. So that's what we did with the S&P 500. It is what it is. We made $123 on the gold half profit last week, and we gave up 100 of it. Trying to gamble on the S&P 500. It is what it is. Speaking of which, the gold position that I have, the remaining gold position, is up 120%. So that's definitely keeping the account balance up. And again, we are more than double where we started out as. Let me see here. I can just so that you guys can see and just so that you know that I'm not bullshitting you guys. Here it is, guys. So as you can see, how much did I put into this? It will actually tell me how much I put into this. A P&L is that. So yeah, I mean, you can see here my P&L is still up. Even though I took that loss, my P&L is still positive. I think I only put in like $300 into this, if I'm not mistaken. Does it say how much I put into this? I thought it would. I guess it's not. But it was something like that. It was like $300 or something like that. And right now we're still up like $189, almost double. Nah, not quite double, but almost close, right? So again, we're doing quite well in this. It's only been open for about a week, and we're doing really good. So that's the point of risk management. It's about how much you keep in this business, okay? So always keep that in mind, guys. Even if you take losses, as long as your gains are bigger than your losses, and over time your equity curve is going up, it's up and to the right, your account values, hey, you're doing good, okay? Always remember that, okay? And there's no need to rush this. If you try to force a trade, you'll notice that this curve will start going down. Now, again, we've only started this like a month or two ago. How much? When did we start? Oh, we started at about I don't remember starting this at a month ago. Okay, so here we go. Yeah, see, I put the money in. See, so I only started with $174. So I only started with $174 on March 23rd. Okay, so it's been a week, literally a week. All right, I started with $173, and then here we are. Okay, so maybe if you guys want to, maybe we can treat this as like the community like challenge account, and we can just go from there. I wouldn't mind doing something like that. Yeah, maybe we do make this the challenge account, okay? And again, right now we do have a gold position that is doing actually quite well. Let me go back to that Trade XYZ. I like the trading UI of Trade XYZ better, but the profit and loss like graph is better on the actual original Hyperliquid UI, but it is what it is. I mean, these things are interchangeable. You can place a trade here and it'll reflect on your Hyperliquid UI. You could place a trade on the Hyperliquid UI and it'll reflect on Trade XYZ as well too. They're all interconnected. Okay, so which is really, really nice about trading on the Hyperliquid network. All these protocols and all these dApps are all like interconnected. So it's very like a seamless user. It's like a seamless user experience. It's really nice, actually. It's really nice. For a crypto trading DEX, it's probably one of the better ones I've tried. So it's really, really nice to use this. And again, I'm going to keep using this. We'll use this as kind of like the community kind of challenge account. We started out with like, you know, 100, 200 bucks, and let's see how much we can grow this. Hopefully we can grow this into like thousands and thousands of dollars, and you can see, and I can prove to you guys that, hey, this is all possible. You don't have to be sitting in front of your screen all day. You can have a normal day job. You can have a life and still trade. You just have to think ahead of time, okay? You just have to think ahead of time, all right? And plan ahead, which is definitely possible. It's all possible, okay? All right, so let's see what else we have in store. Let's talk about like upcoming trades. All right. So there are, there are some trades that, oh, wow, look at that. The S&P 500 is moving up some more. Dang. So if you had sold those puts on Friday, man, most likely you're going to see this go down. So when you're the seller of the put, you want the option price to go down because that's your profit, right? You're buying it back cheaper than what you sold it at. Most likely, if the VIX goes down a lot, oh man, look at that. Look at that. The S&P 500 now is mooning. Dang, I wish I kept my S&P 500 position open. I still have the options open on my IBKR account. So we'll profit a little bit, but we could have profited more if we had kept this. But oh, I see what happened? Was there some sort of announcement? It looks like there's some sort of announcement, because why would it wick like this? Man, that's really funny. Around this time, around this 7:30 Eastern, we started seeing announcements. Remember that whole oil thing last week on Monday? We saw a huge announcement, pre-market on Monday. Are we getting another one of those? It sounds like we are. It looks like we are. It looks like we just got another announcement or something. Look at that. Look at that. See that? It looks like we got something. So what just happened? I don't know. I don't know what happened. We'll see. We're about to find out what just happened. But anyway, so what other trades am I looking at right now? One of the trades that guys, like one of the trades I'm very, very bullish on, and I've been talking about this, was the short treasury bonds. All right, we've shorted treasury bonds multiple times in the last 2 years. I think we have lost on 2 or 3 out of around 10 trades. So it's about a 60 to 70% accuracy rate. We made about 2x to 3x every single time when we won, and then when we lose, we've been losing like 30 to 40%. Okay, so again, it's that mantra of make more than you lose, and also too, our hit rate on shorting treasury bonds has been actually quite good. It's been over 50%. So that also keeps risk management, somewhat easier to do over the long term. But having said that, I do want to short treasury bonds again. At some point, I do think that we might see a little bit of a relief rally, especially if like people are talking about, the recession scare, this and that. I really don't think treasury bonds are going to go back into an uptrend until taxes in the US go up and spending comes down. That will cause a recession. The recession won't happen until taxes go up and government spending comes down. All right, that's when the recession hits. And when the recession hits, that's when treasury bonds will go into a massive uptrend, okay? But not yet, okay? I'm not some perma bear on treasury bonds, okay? Everybody thinks, one of you guys messaged me online, is like, hey man, why are you always like dogging treasury bonds? Because I know. If you read my if you read my X timeline, you'll see like some weird posts that I put on like TLT bulls. Like TLT is the ETF that has the treasury bond, like the 20 to 30 year treasury bond. It holds it in this ETF. It's called TLT, right? It's the easiest way for retail to get involved with longer dated treasury bonds. But if you notice that on some of my posts on TLT, I write some weird things like, what is it the last time I said? I said your bloodline is weak or something like that. On one of these, TLT bulls, your bloodline is weak and you will not make it past the winter. I mean, it's kind of a joke. I'm just trolling. I'm just trolling some people that are like really massively long TLT and they're using data that makes no sense at all. So I'm just trolling them. But I'm not some perma bear on U.S. Treasuries. I'm not some perma bear. It's just like right now with inflation going up. Okay, with inflation going up and everything like that, how can people be okay? How can investors be okay with that low of a long-term interest rate when inflation rate is just as high, right? It makes no sense. It makes no sense to be like that. But anyway, I do think that we might see a little bit of a relief rally in treasuries. So I want to get back into a treasury short when this gets to about 116 or so. Okay, that's the treasury bond futures. Okay, the treasury bond futures is the ticker symbol ZB. I realize that some of you guys are not going to be playing this using CME futures. Most of you guys are probably going to be using the TLT. I'll probably use TLT myself just because the options market is a little bit more liquid than the actual futures options market. So I might do TLT. I might use TLT myself. And the level at TLT when ZB is at 116, it's going to translate to around here, 88.60 to 89. Okay. 88.60 to 89. This is the zone that I want to short treasury bonds. I might do it by buying some puts on TLT. Okay. So when TLT gets around this $88.60 to $89, I'm going to attempt another short on TLT by going long on some put options. Again, guys, put options are the right to sell, which are bearish positions. They're bearish bets on the market, right? So I might be buying some put options on TLT if it gets around 88.60 to 89. That's what I'm looking at. So again, we're going to plan this way out in advance so that you guys don't have to be sitting in front of your screens. I think sitting in front of your screen getting abused by 1 minute candles is probably one of the dumbest things you can do in the market, right? So I like to plan things way ahead. I like to be very strategic about it. Look, anticipate if we get our level, if the market comes to us, we take action then. It's a very disciplined and patient approach, but I think that's the best way to make money in markets. So I am going to be waiting for this $88.60 to $89 zone on TLT. And again, on the ZB futures, it comes to be around that 116 zone in ZB futures, okay? Right around here. See, it's right around where the January highs are, the January 15th highs, a little bit under that. So, you know, January 15th highs right here, a little bit under that. So actually, it might be a little bit less than this. So 88.50. It could be 88.50 or so. All you have to do is just compare TLT and ZB. Whenever ZB hits that 116, wherever that level is, that's where I want to be shorting TLT and buying put options. And I think that's going to be a massive move. And I think we might see that final flush in the yield. And this is where I think yields, I think these yields are going to touch like closer to 6%. All right. But again, it's not going to be a straight line move. You know, treasury bonds are some of the most liquid markets out there. So there's going to be a little bit of back and forth and back and forth. I do think that we have a good chance of seeing a relief rally in long-term treasury bonds. If we see that relief rally, I'm going to be shorting into that rip. I'm shorting the rip on anything that happens on TLT or with treasury bonds in general. And so that's what I'm looking at. Bread, what's going on, homie? Long time no see, man. Good to have you in on the TikTok live stream, bro. Good to see you, bro. It's good to see. I hope you had a wonderful weekend, dude. We're just here talking about money, dude. It's Money Maxxi, baby. You know how we do. Anyway, good to have you in here, bro. So that's the first trade. That's the one trade. That's one of the trades that I'm looking at to short treasury bonds. Another thing that I'm looking at is like certain indicators right now. I went over this last week. Remember LQD over IEF? This is a ratio chart that we were looking at last week. So for those of you who weren't around last week, LQD over IEF, we're basically taking two tickers and we are dividing them by one another to get a ratio between corporate credit investment grade corporate credit. That's what LQD is. LQD, all right, LQD is the corporate bond. Here, I'll go to the, I'll try to, yeah, there we go. LQD, yeah, the LQDC is the investment grade corporate bond ETF, okay? And then I divide the LQD by IEF. IEF is a 7 to 10 year treasury bond ETF, all right? And when you combine the two, when you take LQD and you divide it by IEF, you get this ratio chart. What does this tell us? This tells us the risk premium on corporate credit above a government bond, a government credit, US government credit. So how much of a risk premium is there in corporate credit over government credit? So if this ratio is going up, it means risk on. It means that the risk premium is low. That means that that people are taking risks. The institutional money is taking risks. So when you see LQD over IEF going in an upward direction, up to the right, that is risk on. When it's coming down, that's risk off. That's saying, ooh, you know, we're going to be buying more government bonds and corporate bonds because there's so much risk in private markets. We don't want to touch it. That's when this ratio will start going down. Okay. And so there was a key level, this 1.14. This 1.14 level has been a floor since mid 2025. Okay. And it has been a very important level actually for the last few decades as well. It has been a pivotal point since 2009. All right. And we've maintained at least, you know, minus like a couple of risk events, like minus like the whole Liberation Day, minus the 2024 sell-off in the markets. This has been pretty stable and has been treating this 1.14 as a floor. Now it is treating it as a ceiling. Okay, so if credit conditions don't improve, I am willing to also short the rip on the S&P 500 and the NASDAQ as well. Okay. Now this, and how do we measure that corporate credit liquidity? We're going to use this LQD over IEF as the indicator. If this still is under 1.14 and still maintains that downtrend, then we sell the rip. All right. But this condition must be true. If this condition is not true, there is no sell the rip trade. There is no STR trade. We call it the STR, right? BTD, buy the dip. STR, sell the rip, right? Buy the dip, sell the rip. So we're going to sell the rip as long as LQD IEF is still in a downtrend under that 1.14. All right. If that condition is met, we still go and we go for it. Okay. Long on the US downfall. Brain Code 95. Good to see you as well. I think I know who that is. It's good to see you, Brain Code. I think I know who that is. All right. And also from the tone of the message, I think I know who that is. It's good to see you, man. It's good to finally see you on another live stream as well. I think Brain Code 95. If I think it is who I think it is, you know, we've seen him also. He's a very valued member in our Discord. He's our tech expert, man. He's always on top of tech and he really understands that world. So it's good to see you on here as well, my friend. All right. So, man, 3 of my workers quit. Brad, 3 of your workers quit. Ooh, not good. Not good. I mean, it depends on what kind of business you're in right now. You know, certain industries, employees have pricing power, you know, and in some industries they don't. If you're in tech, you don't have pricing power. If you're a tech employee, it is not a good time for you. But if you're in some type of trade skills, you've got pricing power. So it depends on, you know, what type of market you're in. But I'm sorry to hear that your employees are leaving you. Hopefully you can find some help to help you man the ship, as they say. But anyway, let's go back to the trades that we're looking at. Okay. So again, this is the indicator that I'm looking at, the LQD IEF. LQD IEF in a downtrend. I'm looking to sell the rips in S&P 500 and the NASDAQ. What levels am I looking at specifically? So what I like to look at personally is the actual futures contract prices, just because the futures contract prices, they trade overnight, whereas the S&P 500 index, as well as SPY, the ETF, they don't trade 24/5. They only trade from those market hours, 9:30 a.m. Eastern to 4 p.m., right? So that's why I like to use the futures contract. But, I mean, they should be around the same levels. Now, you're going to notice that the futures contract values are a little bit different than the actual S&P 500 cash index. The index that's traded from 9:30 to 4, we call that the cash index. Why do we call it the cash index? Because there is no margin. There is no debt involved. With futures, because there is leverage, there is a debt there. It's bought on margin. Okay, futures contracts are bought on margin, and that's why the SPX, the official SPX, that's traded on from 9:30 to 4. That's called the cash index because you know, I mean, you can buy S&P 500 with leverage, but lots of people don't. Right, a lot of institutional money, the big money doesn't. Right, they don't use leverage like that. So you know that's why the S&P 500 index that's traded from 9:30 to 4 is called the cash index, but then the futures, you know, is traded 24/5. So I like to use the futures contract just because it's traded 24/5. But again, you know, you can use either one. Just know that the cash index is going to have a little bit of a different value than the futures contract. And the reason why is because the futures contract also accounts for interest rates. Because S&P 500 futures use leverage, you have to account for the interest cost in that futures contract. So that interest cost is baked into the quote for the futures contract for the S&P 500. So that's why there's going to be a little bit of a discrepancy between the cash index and the S&P 500 futures. The S&P 500 futures on TradingView is ticker symbol ES. All right, the ES. But anyway, what I'm looking at right now on ES is I want to see prices come up just a little bit. As I told you guys last week, bear market rallies. Again, I don't know if this is a bear market 100% for sure yet. Okay, you never know if you're in a bear market until after the fact. Okay, but if this is a bear market, that bear market rally is going to be wicked. Remember, I told you guys, the most ferocious rallies in risk assets are during bear market rallies. And I told you why. It's because bear markets, downward trending markets in risk assets tend to be the low liquidity markets. And during low liquidity, it doesn't take a lot of orders to push price out of a certain range. All right. And so that is why bear market rallies tend to be the most ferocious rallies. And therefore, what I'm looking at is if the S&P 500 index fund, if the S&P 500 futures, can get to 68 to 6,900, that's where I will short the market, the S&P 500, between 68 and 6,900, all right? Why such a big range? It really also depends on what the dollar does too, the US dollar. The US dollar, so the US dollar has been going up. If the US dollar is flat while the S&P 500 goes up, all right, then I will short closer to 6,800, all right? If the dollar falls, okay, if the dollar falls as the S&P 500 rallies, then I'm going to be waiting for closer to 6,900. Okay? If the dollar falls while the LQDIEF falls as well, I take the trade at 6,900. I short the S&P 500 when S&P 500 futures is around 6,900. If LQDIEF is falling, but the dollar is staying flat or even rising a little bit, then I will short at 6,800 if the S&P 500 gets to that point. Okay, that is how I'm going to take the trade on the S&P 500. Ideally, I would actually like to take a short. If I'm going to short an index, the index to short, in my opinion, is the NASDAQ. All right, the NASDAQ it will have more to fall than the S&P 500. Why? Because the NASDAQ is tech-centered. It's really, really tech-centered. So tech is the most sensitive to treasury yields. Let me say that again. Big tech companies are the most sensitive to treasury yields. So especially now, if we see that the treasuries, like I said from about a few minutes ago, if treasuries have that relief rally, we could see a big relief rally in the NASDAQ. All right, and if we do, I want to short the NASDAQ around that 25,200. If it can get to that 25,200, that would be a wonderful short on the NASDAQ. I'm going to be using like probably the triple Q put spreads. Triple Q is the QQQ is the NASDAQ ETF. Okay, I'm going to be using put debit spreads definitely if the NASDAQ gets to 25,200. And again, if the treasury bonds have a relief rally, we could see a relief rally happening to the NASDAQ, because again, the NASDAQ is the most sensitive to these government bonds. And again, the conditions still must remain. LQD over IEF must be still in a downtrend under 1.14 in order for me to take that short. Okay. If LQD IEF suddenly like recovers and gets back into an uptrend again, then there is no sell the rip trade. I am not shorting indices if credit conditions are improving rapidly. I am just not going to do that. I am not standing in front of that train if credit conditions improve. Now, if credit conditions keep deteriorating and we just see a relief bounce in the NASDAQ, yes, I will sell that rip all day, every day. Okay. So again, the rules must apply. If one of those rules if one of those conditions are not met, there is no trade. Okay. There's no need to act when we don't have our edge. Okay. If LQD IEF still remains in a downtrend and we see a relief rally in the NASDAQ, that's our edge. That's our edge. Okay. So we wait for our edge. If we still have our edge, we act on it. If there is no edge, if our conditions aren't met, we wait for the next trade. There will always be another trade around the corner. Opportunities are abundant. Let's have the mindset of wealth. Okay. No matter how broke we are right now. Okay. Being broke is a temporary position, but having the mindset of wealth, that is permanent. Okay. So have the mindset of wealth, and wealth will always be attracted to you. Those are the rules of the game. Okay. Anyway, those are the trades that I'm looking at. So we went over a treasury trade, a S&P 500 trade, and a NASDAQ trade. And as you guys already know, I'm still waiting on Brazil. Brazil. Oh my God, Brazil is already popping up. Oh my goodness. It basically got rid of all of Friday's losses. Come on, man. I'm really trying to get EWZ. I really want more Brazil. We took some profits around here when at the highs. We made good money on half our Brazil position. So we only have a half position right now. I want a full position. I need my price. I need 31 to 32. We shall see. Okay. I think maybe this week we see that relief rally in risk assets. And then the week after that, if credit conditions like still keep deteriorating, all that stuff, then I think we have a good trade. Okay, maybe we get our short trades that I just talked about before, and maybe, hopefully, Brazil comes down to our level so we can get long again. Okay, so those are the biggest trades I'm looking at. Okay, I'm focusing on the indices, and I'm focusing on Brazil for the long term. Okay, that is my focus right now. It's a very noisy market. I don't want to be looking at too many things. Focus is a superpower in a noisy world. All right, let's focus on what we can. Let's really, really hone in on the opportunities that we can capitalize on. Everything else is noise, okay? Everything else is noise. Let's drop all the noise and let's just go after where we have our biggest edge, okay? The biggest edge right now, macro conditions, is Brazil. Brazil. Also gold too. We're already long on gold right now. Our gold position is doing extremely well. Again, our gold position is up 132% right now. I'm going to hold on to this. I'll take profits on the rest of this position if gold gets to around 4,800 or so. I think 4,800 is a good place to just take all the profits off the table, like around that 48 to 4,900, actually, possibly around that 4,860, 4,870 zone. If it hits there, I'm going to take the rest of the profits on that, and then we wait for the next trade, okay, for gold. So gold take profit, full take profit. We're going to do it around that 4,800 to 4,900 zone. And yeah, right now our gold position is doing extremely well. Not only do we have the gold position in our Hyperliquid Trade XYZ account, but also on the on my interactive brokerage account in TradFi, I got those GLD call spreads. Remember GLD? We got those June call spreads for $7.50 from 440 to 470. So right now with GLD. We're probably, I think we're up like already 20% on that. Probably after today's opening, we're probably going to be up probably over like 30-40% profit on that. But still, I'm holding out till we get to around that 48.50. Around that 48.50 zone, most likely GLD will probably be around that 450 to 460. So we'll probably double or triple our money on the GLD call option spreads. So GLD, guys, for those that don't know, GLD is the gold ETF. It's the ETF that holds gold bars. It's one of the most liquid and the biggest gold ETF there is out there. So we used the call spreads. We used a bullish option strategy on this. We're making good money on this. We're already up very significantly on this, which is good. Our gold trade is doing extremely well. Gold, remember guys, I told you guys, the economics on gold, central banks are buying. Actually, I found out something. It came out over the weekend that this big drop here in gold. Let's actually go to the actual gold spot market. So this drawdown in gold, guess where it was from? Apparently, the Turkish central bank got their gold position liquidated. I don't understand. I don't understand how Turkey would do that. I don't know if they got liquidated because of like margin requirements, which is like really embarrassing. Like if you're a central bank and you got into a margin call and you couldn't save your position, that's really embarrassing. All right. Maybe it's not that. Maybe they sold gold to buy another currency reserve. Maybe it was that. I don't know. All I know is the rumor is that the central bank of Turkey liquidated a large amount of gold overnight, one of these days right here, which caused the gold market to kind of dump like this. But it was one central bank that did that, okay? During off hours. Remember, guys, I told you guys a warning right before we took this gold position. Gold is one of those things. Precious metals during off hours are one of the most thinly traded markets out there. Okay, it's one of the most thinly traded markets out there during off hours, and so these kind of big price wicks can happen. And remember, this is why I remember for those some of you guys that were in our X spaces from last year, I was saying, oh yeah, remember when I was talking about gold when it was like 5,500, I was like, hey, yeah, I'm not going to get involved unless we get to like the 41 to 4,300 zone. And people were laughing at me like, you really think gold's going to go down 20-30%, in the near future? I'm like, it could. I mean, what this right here from 5,000 down to 4,000, it did minus 25% in 1, 2, 3, 4 sessions. All it took was 4 days. 4 days of price action to come down 25%. That's the nature of gold. That's the nature of precious metals. If you ain't ready for that kind of volatility, don't play the game. All right. And because I know there's that much volatility in gold, I have to remain patient. If you knew that prices could move against you 25% in a matter of 4 days, aren't you going to be patient for better levels? Hell yeah, you are. So this is exactly the reason why I always preach to you guys patience and discipline, because without that, you're going to get whipsawed in markets like gold, like all these other things. And right now, even the S&P 500 is making outsized moves. I mean, right now the VIX is at 30. So, we're talking about, an average of like 2% moves a day that's being priced into the markets. Just a quick calculation, like a quick kind of shortcut. Remember, VIX is the scare index. It basically tells you how expensive options are in the S&P 500 for the next on 30-day dated options. So one of the tricks that you can use is called the rule of 16. Take the VIX divided by 16, and that's a rough estimate of what the options market is pricing in on a daily move on the S&P 500. Okay, it's called the rule of 16. So you take 30, you divide it by 16, that's like 1.8, 1.9, almost 2%. Yeah. So that means right now the options market in the S&P 500 is pricing in anywhere from 1.8 to 1.9 percentage moves per day. Okay, that's it's something that, you know, it's a little quick mental like estimation that you can do. It's called the rule of 16 for the VIX. All right. So right now the market is pricing in a little bit less than 2% moves on a daily basis. That's a huge move. The average VIX is around 15, 16. So the average move is, you know, a little bit less than 1%. Okay. So it's doing about double you know, what the average is. So that's a lot of volatility in the market. So again, when there's a lot of volatility, patience and discipline are even that much more important. I mean, I think patience and discipline is important in all trading, in all time spans, in everything. That's like probably the two most important things of patience and discipline. But especially when volatility goes up, it just takes over everything. That patience and discipline is a difference between, are you going to be able to trade again next season, or did you just get fired from the market? So remember that, guys. Like, really be safe out there, and you don't need massive position sizes to make money on a volatile movement like this. Okay. So even on a small position, if prices are moving a lot, you can still make a lot of money. There's no need to oversize your positions in a market where it's very noisy like this, especially one that's driven a lot by headlines with what's going on with Iran, with Trump, with oil and all this stuff. Speaking of which, let's go to oil real quick. Oil, let's actually see what's going on. Oh, is the S&P 500 falling again? Man, what? Okay, let's see what happened. Something must have happened here. Oh, there is. Okay, so remember this? I remember like 20, 30 minutes ago, we were like, oh, what happened? The market just like popped up and went back down. So Trump says U.S. will destroy Iran's oil wells, Karg Island, without deal to immediately reopen Hormuz Strait. So, of course, I knew once I saw that wick at 7 in the morning that it had to be a Trump thing, because this guy is so predictable, bro. Like, this guy is so predictable. Like, this guy wakes up on a Monday. Remember that big oil announcement? Remember that big announcement last Monday? Last Monday around this time, remember it was like 7:04 a.m. Remember when the markets went up like 2.5%, all that stuff? Remember that was that Monday, right? Now it's at 7:30, 7:40. He does the same thing. So this guy is so predictable. He wakes up probably 6, 7 in the morning, puts on CNBC, sees what people are talking about, and then calls in or, you know, makes a post and starts, you know, wreaking havoc on the markets, right? This guy loves to do that. He's very predictable like this. But last week it was at 7:04 a.m. when he made that, you know, that, we're talking about a peace deal with Iran. Remember? That was last week at 7:04 a.m. Eastern on Monday, and now around 7:30 a.m. Eastern, he's talking about, oh, now he's going to destroy Iran's oil if they don't open it up immediately. So week to week, day by day, there's a new headline, a new theme, a new tone that the president has. And this is another question. Now we're getting to some of the questions that some of our community members are sending in. One guy asked me, there was somebody who we had a discussion in our Discord. They said, how do you know which way Trump is going to go, like, and what Trump's going to say and how the market's going to react based on what Trump says? How do you know? And I said, I don't know. And they're like, well, then how did you get that great entry on gold? I was like, it had nothing to do with Trump. It had nothing to do with Trump. I don't know. Dude, I don't know. You don't know. Nobody knows what's going on inside the mind of that man. Okay? Nobody knows. All right? And the thing is, and it's not just him. What about those crazy, you know, fanatical Iranians, the Revolutionary Guard or whatever? I don't know what they're thinking either. Those guys are just as crazy, you know, or crazier, right? We're looking at two crazy groups. They're like just reacting live to each other right now. So I have no idea what Trump is going to say, what tone he's going to have. I have no idea. All right. But again, I keep stressing this. Trading and making money in the markets is not about predicting the future. It's about managing risk. Uncertainty is your best friend as a trader, right? When people ask me, how did I predict something? That's a mindset of somebody who does not accept uncertainty, right? When somebody's asking me, how did you predict that? In their mind, I already know that they think that there is some degree of certainty in the markets. There's no such thing. All right. Our job as traders, we are paid as traders, as capital deployers, we are paid not to predict the future. We are paid to manage risk in front of uncertainty. I don't know. You don't know. Nobody knows. All I know is that if Trump said something crazy, that we were going to see outsized moves and maybe our orders will trigger. That's why I set my orders so far away, because I knew, well, if there's a lot of volatility, if somebody says something crazy, we might get our price. So I embraced that uncertainty, and that's why I got paid, because I embraced that uncertainty. I embraced that nobody knows. Somebody could say something really crazy and markets could get pushed down out of range. And if it does, I want to take advantage of that. So that is the mindset that you need to have if you want to make money in the markets. It's not about predicting the future. It's about accepting that uncertainty and managing risk around it. And this is why I told you guys, do not do full-size, outsized positions. You need to start minimizing your position sizes so that you can withstand volatility. Remember how I said that last week? This is why. Okay? Because you never know, all right? And because markets are more volatile, you don't need as big of a position to make the same amount of money. You see what I mean? So you can still participate in similar reward structures, but you can also limit your position sizes. And again, that also keeps you safe so that it keeps you in the position and so you can withstand more volatility against you. And this is what I've been saying. This is what I've been preaching. Really, your long-term success in this business is about risk management. It's not about predicting the future. All right. Actually, I'll tell you somebody who's like the perfect example of this is Stanley Druckenmiller. Stanley Druckenmiller. Look him up. Stanley Druckenmiller. All right. He's had an average of 30+% yearly average rate of return for over a decade. Okay. He has never had a losing year. Okay. For like multiple decades. And it's confirmable because he's like a large hedge fund operator. So he actually has to report his positions every quarter to the SEC on a form called a 13F. So every one of his trades, every one of his positions is it's public knowledge, and he has to. He's required by law to report his positions. And he's been doing that for 20-something years now. And his average rate of return is 30+% per year. He has never had a losing year. He has never had a losing year throughout 2008, throughout like 2022 bear market. Doesn't matter. He has never lost money in a year. All right. But he is like the perfect example of somebody who's habitually wrong in his analysis, but he's always making money. Like that dude is, if you actually listen to his like macro analysis, man, he gets it so wrong. Like sometimes, and you listen to what he said like a year ago, and then you see what's going on in the world, and you're like, damn, he's wrong. But guess what? He's always making money, right? And that's what this business is about. The business of trading is not about being right or wrong. It's about making money. Like I'd rather be wrong and rich than right and poor. All right. And Stanley Druckenmiller is like the perfect example of that. That dude, his macro analysis is like, I mean, it's not always wrong, but he gets a lot of things wrong. He does. I mean, no disrespect to the guy. I respect the guy. Stanley Druckenmiller is like one of my heroes, man. That dude, but that dude, his analysis on macroeconomics is usually wrong, but he always makes money. Why? Because of his risk management. His risk management is like second to none. Man, that dude is patient. That dude is patient. All right. Speaking of which, Stanley Druckenmiller's latest position ad, guess what it is? Brazil. But we got in before he did. Yay! So I'm really happy with myself because I got into a position before Stanley Druckenmiller did. Yeah, I beat him by 2 quarters. So, but yeah, Stanley Druckenmiller in his last 13F, he started heavily acquiring Brazilian assets. So we got ahead of that. And hey, there's some benefits to chasing this chicken. You know, what can I say? What can I say? Every once in a while, I get it right too. So again, it's not about being right or wrong. It's about managing risk. It's about keeping money. Okay, that's the most important thing. All right, I'd rather be wrong and rich than right and poor. Okay, always remember that. All right, so that's why like I find it really funny on CT on like Twitter. Whenever I see people debating about macro things and they're like, oh, no, I'm right, you're wrong, you're a fool, you're stupid, I'm stupid, blah, 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 all this stuff. They're having these like dramatic, like drama, like arguments about over macro and price and this and that. And it's just like, what I like to like ask these fools is like, are any of you making money off of this? And I bet you it's a no. Because if somebody was making money off of this, there'd be no argument. It'd be like whoever's making money would be like, oh, fuck this guy. I'm not wasting my time with this shit. I'm here to make money. And there would be no argument then, right? You know, it's that saying that Jay-Z always says, you know, when you argue with a fool from far away, no one can tell you guys apart, you know? So, yeah, I mean, I just find it really funny on CTs, find these people like debating macro things, and they're just debating at each other, they're going at each other, it gets real nasty, lots of drama and this and that. And I just want to ask, like, are any of you guys making money on this? Like, you know, like, is this like, does this involve money somehow? You know, and usually the answer is no. You know, this usually the answer is no. And they're just doing it for the pride or for clout or whatever the fuck, all right? Another thing that, you know, that I saw also too on the whole Iran situation, and after this, we'll stop talking about Iran. But one of the things I saw was aluminum. So apparently there was an attack on an aluminum station in the Gulf somewhere. I'm not really sure. I forgot what country it was, but I did notice, I got an alert. Alcoa is one of the largest aluminum producers in the world. It is actually a pretty important stock. It's actually a stock that is used as an indicator for industrial metal demand. And so Alcoa is like one of those old school stocks that people have on their watch lists, not because they're trading it, but they're using it as an indicator. So I noticed that Alcoa, I got a huge alert this morning saying that Alcoa is up over 10% in pre-market because of this attack on an aluminum facility in the Middle East. So I don't know if there's going to be some aluminum shortage or what, if that was a market is pricing, but I did notice that Alcoa made this huge jump. So we shall see. I mean, this just adds to the inflation like fire, right? Energy prices are going up, the fertilizer price, because, you know, a lot of the fertilizers use a byproduct of natural gas, and Qatar, half the people I talk to, they call that country Qatar, half the people call it Qatar, whatever that country, Qatar in the Gulf, yeah? So they produce like 20 to 30% of natural gas for the Europe and Asia market. So they're having a hard time getting their natural gas out there. Natural gas byproducts are used for fertilizers and for certain materials and plastics and things like that. So, you know, so not only do we have energy inflation, we might even have food inflation, soft commodity inflation, and now we're looking at a possible metal inflation as well too, with Alcoa and all of this. And so, you know, I think, again, that just supports our thesis that we're probably going to see lower treasury bond prices, higher treasury bond yields. Remember, yields and interest rates move opposite of bond prices. When bond prices come down, yields and interest rates go up. When bond prices are going up, yield and interest rates are going down. Okay, they move opposite. The price of the bond and the actual interest rate move opposite of one another. Okay, so this adds to our thesis that, you know, if we do see a relief rally in treasuries, I don't think it will be long-lived, and I do think that we retest those lows for the year or make new lows for the year if we see that relief rally. And again, it just reinforces that short treasury bond thesis. And again, I'm not willing to short it here, okay? I'm not some perma bear. I'm not shorting it here. Again, I gotta wait for my edge. Our edge appears at 116 on the ZB Treasury Bonds futures contract. But again, if you guys are using TLT, which most retail traders would use, we're looking at that, you know, that 88.5 to 89 zone, okay? The 88.5 to 89 zone, boom, if it gets back there, I'm shorting Treasury Bonds again. I'm gonna use put debit spreads on TLT. And guys, of course, I'll give you real-time trade alerts on the Discord. Again, like, you don't need those real-time trade alerts because I tell you guys ahead of time, just like this, I tell you guys ahead of time. And oftentimes we wait weeks at a time for our trade to execute. But, you know, I like the strategic approach. I like to see things coming ahead of time. I like to be very strategic. I like to play chess, not checkers. You know, we're not moving just one piece at a time. We're trying to move 5, 10 steps ahead at a time, right? So I want to be strategic about it. I'm waiting for that 88.5, 89 zone on TLT. Boom. That's when we take the short on TLT right then and there. Okay. So that's kind of, you know, what I'm looking at. And so we're seeing that outsized demand for Alcoa. And so we might, you know, I don't know, for some reason we're seeing aluminum, you know, markets reacting in that way. Actually, you know what I'm really curious about? How's uranium doing? Okay. Not so well. All right. Well, uranium was one of our plays that we got into back in 2022, 2023. We got out. I remember I sold cover calls on it and I got my shares called away on that UUUU. This was like years ago. Yeah, UUUU. Dang, I got it called away like here. Boo! I know we could have made way more money, but I still made good money. I think I got in, my average price was like around $5 a share, but I got called away at like $8. So we made like, I don't know, like 60%. But if I had held it, oh my God, we would have made a lot more. Oh well, it is what it is. I mean, it is what it is. You know, as long as we're making money, I'm good. But uranium, I think, is going to be another one of those that I think long term uranium technology will do well. Actually, you know what's a country that is actually doing a lot of uranium research is actually India. India is doing a lot of uranium research. They're about to leapfrog the grid system, and what they're doing a lot of research and development on is micro reactors. Because there's a lot of communities in the inland of India they're not hooked up to the grid. And so what they're trying to do is leapfrog that grid technology and go into these micro reactors. So India is actually doing a lot of research and development around that. I'm so glad that we took India off of our conviction list. And remember, we got rid of this on our conviction list because of that potential Iran situation. Iran and India share a border. All right. And so we were worried. I was worried that, gee, if something escalates in Iran, India's rupee could take a big hit. And in fact, it did. India's rupee has just done terribly. So this is dollar rupee. So a dollar rupee means long dollar, short rupee. So this going up means Indian rupee is coming down. Okay. Dollar rupee. When the dollar rupee chart is going up, it means the Indian rupee is coming down. This up means the dollar is going up in relation to the rupee. So you got, okay, you know what? I'll just flip the chart. Usually it's not quoted in this way. Usually the Indian rupee is quoted as dollar rupee, but if you want to see the rupee dollar, this is how it looks like. So this is the price of the rupee. So as you can see, the rupee has been going way down, which affects the pricing on an ETF like INDA. So this is one of the things that we talked about. We were like, dude, if Iran escalates, we don't want to put India on our conviction list because that rupee falling is going to hit the INDA price. And in fact, it did. So I am so glad we took India off of our conviction list. But my conviction in EWZ and Mexico still stands. We do not have any Mexico. Mexico is one of those markets. We tried to get a pullback. We never got a pullback. We remember we were talking about this in 2025. Like, oh my God, on the next major pullback, we'll get Mexico. It just never happened. I mean, it kind of happened here, but I was actually holding out for like around 67. Maybe I should have just gotten in. I don't know. But definitely EWZ Brazil. I mean, this has been truly magnificent. And we got really lucky. It was back in July and August. Remember, we had a major pullback because Trump and that other dude, Lula, they had a fight over the Trump bromance, the Bolsonaro. You know, they put Bolsonaro in jail and Trump got real crazy and he tried to loop in his trade policy with Bolsonaro getting arrested. And he was like, oh, if Lula's going to do that, then I'm going to put a tariff on Brazil. And Brazil was like, okay, whatever, man. You know, and 4 weeks later, Trump's always chickens out. He chickened out and he had to remove all the Brazil tariffs after 4 weeks because Brazil is just one of those countries that is untariffable because they're exports are so high in demand. Coffee, bananas, oranges, meats, grains, and energy, metals, all this stuff is so high in demand that whenever US tariffed Brazil, all the other countries like India, China, Europe, all these other countries were like, well, we'll take that order. We'll actually give you concessions for it. So it was just not a good idea to tariff Brazil. Again, Brazil's just one of those countries that's untariffable. And that was part of our thesis for EWZ. Anyway, I'm going long on EWZ. I see some people writing in right now. Let me get to that right now. I'm not ignoring you. And it's just like, I'm just going through like my spiels and things. But I see Sardine. Oh. Sardine Sven, it's good to see you, man. Hi there. You doing stocks? Hell yeah, I'm doing stocks. EU is going to invest in nuclear, but it's so unclear what nuclear companies will benefit. Yeah. I actually like the uranium miners. And there was one uranium miner in particular we were getting involved with was UUUU, and this is like because they actually have a uranium facility. They're the only company that has a licensed uranium facility in the United States. So that was one company that we were long on back in 2022, 2023. I am not long in anything uranium. Or you can actually take the guessing work off of companies, and you could just buy the uranium miner ETF. So you're not taking any individual company risk. You're just buying into like a cross section of the uranium and nuclear industry. So you can take the guessing game out of the company stocks and things like that and just buy into an ETF. There's nothing wrong with that. And I do agree. Yeah, I think uranium is the way to go. I know that back in 2022, Germany had a big reckoning because of all their green energy policies. They were shutting down nuclear plants, but guess what they were using instead of uranium? They were burning coal. So it was like, okay, so you have all these green policies that make it impossible to run a nuclear power plant, but you're going to burn coal, And I think it was a rude awakening for Europe. I think Europe's energy policies have been a disaster, okay? You have to diversify into other clean energies, and I think one of the most overlooked energy sources is nuclear. Nuclear is the way forward. It is a clean energy source, and I know there's a lot of stigma against nuclear energy, but just on a physics scale and just on a cost basis, nuclear really should be part of the energy policy of lots of these different countries. But anyway, that's just my opinion. But anyway, hopefully we get some people, to wake up about nuclear energy, because I do think nuclear energy is the way to go. What's good, Chicken Nightbread? It's good to see you, man. Thank you for joining the stream, man. Good to see some new people in here as well. I like First Trust NASDAQ Clean Edge Smart Grid Infrastructure UCITS ETF. First Trust NASDAQ Clean Edge Smart. What's the ticker for that? First Trust NASDAQ Edge Smart Grid Infrastructure UCITS Index. Is this it? This is First Trust NASDAQ Clean Edge Smart. Okay, so one of our viewers just talked about this ETF. I don't know that much about this ETF, to be honest. I've never heard of this. I'll do a little bit of research on this and let you know what I think about it. I don't know what the components are. I'd have to look at all the components. Smart grid infrastructure. Okay, I'll look into this. Thank you for sharing this with me. I'll definitely take a look at this. It looks like it is in a bull market trend. So I do like trending assets. Trend is your friend, as Warren Buffett says. The trend is your friend. It's all companies building and restoring grid around the world. I see. Okay. I'll take a look and see what the components are. Maybe there's a few components in there that we could take advantage of for the long term. I definitely. Hey, you know me. I'm always all about that alpha. So I'll take a look at the components and see if we can get some alpha out of this. Nice. Very, very nice indeed. Okay, so we will, we'll take a look at all this stuff. So thank you, Sardine Sven, for shedding some light on this. I will definitely take a look at this one. So this is grid. Let me just put grid ETF. I'll just put it in here so that I don't forget. Grid ETF. Okay. Yep, there we go. All right, so there's that. Oh, okay. So let me go through some of these other requests that I had. We had actually a couple of people make some requests. I don't want to miss them. Okay, so here's one request. Here's one question that I got over the weekend. So this community member wrote, I'm a little confused on the whole FIRE concept. The FIRE concept, for those that don't know, is financially independent, retire early, right? It's a lot of millennials and younger generations. They want to be able to retire earlier rather than the whole 60, 65, the traditional retirement age. They want to be able to retire in their 30s or 40s, let's say, okay? So that's the whole FIRE movement, financially independent, retire early. Anyway, I'm a little confused about the whole FIRE concept. If I wanted to put money aggressively into my 401k and Roth to hit my retirement target and retire at an earlier age, like 45 or something, wouldn't I then get hit with huge early withdrawal penalties if I start living off those retirement accounts? Are you supposed to also invest some percentage in a personal brokerage that you can then pull from before you're 59 and a half? That's a very, very good question. All right. So yes, what you're talking about, 401k, Roth IRA, traditional IRA, all those types of accounts are what we call tax sheltered accounts. They are tax deferred accounts. Basically, you're deferring your taxes on gains until you start pulling money out of it, right? And the whole reason why the IRS and the US tax system gives you that tax incentive to use that account is because they want to incentivize you to save up for your own retirement. But because they are giving you that tax incentive, they put some age restrictions on when you can access your funds without a penalty. And you are, in fact, correct. There is a 59 and a half rule. If you're still working at 59 and a half, you can start pulling your money out at 59 and a half years old without incurring that IRS penalty. If you retire by 55, if you're 55 and you're not working, then you can also bypass that penalty as well. So it's either separated from service, not working anymore at 55, or 59 and a half. That's the rules, all right? So if you pull money out before then, you do get taxed. You do get penalized. There is a 10% penalty, and there are some states within the United States that will also put their own state penalties on top of that. California is one of those states that puts a state penalty on top of the federal penalty. All right, so just keep that in mind. So yes, you are penalized for that. Now, having said that, having a tax deferred account is pretty useful because let's say like same rate of return for same rate of return. Let's say I make just to make the math easy, let's say I'm making 10% a year, right? If I'm making 10% a year actively trading and holding on to positions, holding on to positions that are, less than a year or something like that, or even if it's over a year, it doesn't really matter. But if I'm actively managing positions on a taxable account, every year, a portion of my gains are going to get taxed, right? So if I make 10% a year, 3 or 4% of that, 30 to 40% of that 10%, which comes out to be about 3 or 4 points, 3 or 4% of that 10%, I'm going to have to pay in taxes, right? So it slows down your growth a little bit. Whereas on a tax deferred account, like a Roth IRA or a 401k or a traditional IRA, if you're making 10%, well, you keep all that 10%. You're not taxed year to year to year like you are on a traditional, on a personal brokerage account, right? If you're on a personal brokerage account, every year that you have gains, realized gains, you're going to get taxed. A percentage of that needs to go to Uncle Sam, needs to go to the tax authorities, all right? So if you are trying to do that financially independent, retire early, you still, I think, should have a tax deferred account for long-term planning purposes. But yes, you're going to also want to have a personal brokerage account where you can pull money out, without having to incur these penalties. One guy, and this is now this part, take it with a grain of salt. Do not actually do this. Okay? Do not actually do this. There's a lot of uncertainty in this, but I saw a calculation where somebody opened up a Roth IRA and they invested it for like 5-6 years. and they were consistent with their gains. And even though they were not in their 50s, I think they were like in their late 30s, they started living off of that Roth IRA and just paying the penalties. And it came to be that because their gains were so much larger than the amount they were pulling out every year to cover their bills, it ended up making sense to just eat the penalty. I do not recommend you do that. I do not recommend you do that. All right? Because the thing is, you're assuming that every year you're going to have consistent returns. You're also assuming that you can control your expenditures. And you're also assuming that you're not going to have an emergency where you need to take out a big chunk of that money. All right? There's a lot of assumptions in there that may not hold true. So I do not recommend doing that. But there is a situation where mathematically speaking, it still makes sense to take the penalty. But again, I do not recommend you do that. Okay. What's smarter would be to it's just like diversifying your portfolio, diversify your tax regime, diversify your tax structure. You have some tax deferred accounts. You have a Roth IRA. Also have that personal brokerage account so that you have two working for you. You have one that's tax deferred. You also have one where, yeah, you're going to have to pay taxes on all your gains every year. But if you need to pull some money out in an emergency and not have to deal with a penalty, you have that as well too. Okay. So yes, you're absolutely right. Whoever wrote that question, there are some penalties. What I recommend that you do, I think the safest thing to do is to have that personal brokerage account and do your tax deferred strategies at the same time like that, so that you can have a little bit of short-term money with your personal tax account, your personal brokerage account, but then you can also have some long-term planning with your Roth or your 401k or whatever your tax deferred account is. By the way, guys, we are getting closer to tax due dates. You guys in the US, you guys have 2 more weeks to file your taxes, which means you got 2 more weeks to make your 2025 contributions to your 401ks, your Roth IRAs, your traditional IRAs, your tax deferred accounts, your SEP IRAs, whatever it may be. You've got another 2 weeks to make prior year contributions. That's contributions going toward your 2025 tax year. You got about 2 weeks left to do that. Talk to your accountants, see where you can save some money, see where you can put some money away on a tax deferred basis. Guys, I really recommend you do that. You got some extra money lying around that you're not going to need for the next, whatever. Hey, look into that. There are some tax benefits to do that. Talk to your accountants. Make sure you understand what you're getting into. All right, so there is that. The next question that I had. Okay, so this one is really, really good. Now, there's a lot of context in this one, so let me read you exactly everything that they wrote. So this community wrote, I am starting the process of moving to a different state. I am 27 and staying with my parents, so staying here permanently is not an option. Before I move, I will be buying a car and getting car insurance plans. My student loans are currently on hold, but the payments will be starting again in a few months. I do not have a way of knowing how much the payment will be until the government verifies my income based on my taxes from the year before last. All of this is to say that a lot of my calculated cost of living for after the move is based on estimating rent, car costs, and the loan payment. Rent is based on the area, but everything else is based on the national average. It looks like I will need roughly $712.50 per week to live. That would be around $46,000 before taxes, more like $35,000 after taxes. If paid hourly, I would need to be working 40 hours per week at $22 per hour. If I had 2 part-time jobs and worked 50 hours a week, I would need to be making $17.65. If working 60 hours per week, I would need to be making $14.75. All of this factors in taxes and the necessary $712.50 is to take home pay. Wait a minute. Let me read that last. All of this factors in taxes and the necessary $712.50 is take home pay. I see what you mean. Okay. So if I can find a 40-hour per week full-time job at over $46,000, that's the first choice. Tax math here is from Smart Asset. I have no kids, but I buy mostly store brand groceries. I do not drink alcohol, and all the calculations are based on sharing the apartment with roommates. Most jobs in the area are $15 an hour, so I will likely have to work close to 50 to 60 hours to survive. I have chronic fatigue, an issue related to my heart rate. I'm not sure if 60 hours a week is doable for my body, even if I want it to be. I guess it depends on the job. Unless I get really lucky with a job that pays well, I just worry things will be completely hopeless. I am not asking for money. I'm asking how to manage this. Thank you. That is pretty, first of all, thank you for sharing all of that. I'm sure it wasn't like the easiest thing to write all that and to share with like a complete stranger, especially a complete stranger that wears a chicken mask, online. To that, I will say this, we actually had this discussion last week. Remember how we were talking about like a lot of people, especially millennials and younger, Gen Z, Gen Alpha, all these guys, a lot of them they know that the advice that they were given as kids, go to school, get a college degree, get a good job, and you're going to make it. A lot of young people know that that is not going to be the case anymore. Okay. And this is why I've been telling everybody, if you're under 45 years old, you really need to learn how to trade. You really need to know how to invest. You really need to generate alpha, extra returns over an average return. Okay. So this is the whole reason why I started Money Maxxi, is because I want to give people the knowledge and the power to go and generate that alpha. All right. Now, having said that, you sound like you haven't made this move yet. There's nothing wrong with delaying this. I don't know if you're able to delay this move. Maybe you could stay with your parents just for a little bit more so you could save a little bit more money. If you haven't left yet, maybe that might, help you save a little bit of money, help you save a little cost. I think, working for an hourly wage for more than 50, 60 hours a week at that rate may not be the best thing for you, because how are you going to build anything outside of your own work if you're spending 60 hours a week at a job, right? What I mean by that is, what about a side business, a side hustle? Like all these things are impossible then. If you're spending 60 hours a week just making sure food is on the table and the rent is getting paid, right? So I know it's easier said than done, but you really want to maximize how much you get paid per hour so that you can spend the least amount of hours at your job and you can spend some more hours doing something else that will generate some other income for you later on. All right. I know that this is very, very difficult to manage, and it is. I mean, from what you're saying, this sounds very, very difficult to manage. And so this is why I think if you're still living with your parents, if you haven't moved out yet, and I noticed that you wrote me this yesterday, so maybe you haven't moved out yet. It may not be a bad idea to stay with your parents just for a little bit more, to save a little bit more money. What's wrong with getting a job near you guys? If it's something where your parents are trying to like kick you out of the house, maybe you could work out a deal where you pay them partial rent. A rate of rent that's less than what you can get on your own with roommates, right? If you were planning on spending $400 a month on rent for your share and splitting that with four other people, where four of you are paying $400 each for a $1,600 apartment or something like that, maybe you can offer your parents, hey, I'll pay you $250 of rent for my room or something like that. It's less than what you were going to pay, is less than that $400 that you were willing to pay, but it's something where your parents then feel like, that they're not like coddling you or anything like that, because, maybe your parents are kicking you out. And I don't know. I don't know for sure if your parents are kicking you out, because you that's how you wrote it. You wrote, I'm 27, staying with my parents, so staying here permanently is not an option. So I don't know if they're pressuring you to leave, like to kind of like to have your own nest, so to speak, and to spread your own wings, and if that's the case, they're doing that out of a position of love. They want you to become more independent. They want you to grow stronger on your own, right? But maybe you aren't ready for that. And you can explain that to them. Hey, look, I'm not ready to do this, but, I want to earn my own way in life. Let me pay you rent. You can do that to your parents. right? And again, and this is just an example, if you were willing to pay $400 for your portion of rent with your roommates in this new location, maybe you can work out a deal with your parents, say, hey, I'll pay you $200, $250 in rent. And that way your parents have accomplished that goal of giving you kind of that real world, like adult experience of paying rent and being, responsible for yourself. But at the same time, they're not just like kicking you into like this really, really bad situation. All right. So I don't know. Maybe that's something that to talk about with your parents. And I don't know like what type of work you're doing or anything like that, but you really want to maximize how much you're making per hour. I don't recommend that you work in like 60, 70 hours just at this like hourly wage job, because again, how are you going to build anything outside of this? How are you going to learn? I mean, even if you're not starting a side business, how are you going to get training for something new? How are you going to learn something new? How are you going to do all that? How are you going to expand your horizons if you're stuck, 60 hours? Because let me tell you, man, working 60 hours, you may be thinking to yourself, well, I'm awake like 17, 18 hours a day times 7, 18 times 7 is, 126. If I work 60 hours, I still got 66 hours to do something else. It doesn't work like that, man. You work 60 hours a week, you're going to be tired. You're not going to be as productive in your other times. It's going to be really hard for you to do a side gig, learn something else, grow something, whatever it is. So you really want to maximize your free time so that you can get to like a better paying situation. All right. And I really do recommend that. Like, I get it. If you work 60 hours right now at that hourly rate, you can make more money now. But is that extra 20 hours versus working 40 hours? Is that really going to like change your life trajectory? Probably not. What's probably going to change your life trajectory more is if you find another way of making money, something more passive, something that you could really grow on, where you're not really dependent on somebody else promoting you in order for you to get paid more. Okay. Just something to think about, man. Just something to think about. I shouldn't even call you man. You could be a woman. So fam, just think about it, fam. Think about it. All right. And have that conversation with your parents too. Maybe your parents can shed some light and some wisdom. And again, have that offer ready in your back pocket. If your parents are like, hey, we need you to become more independent. You need to become more of an adult. You need to grow up. You can just be very respectful and say, look, I understand. I'm just not ready to make this big of a transition right now, but I do respect the fact that I should be more independent. Can I pay rent to stay here just for a few more months? I'll get a job here and I'll pay you, X amount of rent, whatever's reasonable. Yeah. Let me tell you, your parents will probably be impressed that you're the one bringing that up, that you are the one that wants to pay rent. You want to be the one that contribute to the bills. Yeah. They might be very impressed with that. Okay. And they might let you stay a little bit and they might give you a good rate, and, maybe ask them for the friends and family rate. I mean, you guys are parents and parent and child, after all. They should be giving you a family rate, right, man? But even if they don't, even if they give you a market rate, I'm sure that the cost savings of living at home is still going to be better than you trying to live on your own, making this big change when you're not even certain how much money you could be making, okay? Just something to think about. That's my 2 cents on this, okay? Let me go through some of these other comments. I see a bunch of new comments here. Where do you get your news from? Where do I get my news from? It's really funny. Okay, so you probably saw on my screen. I mean, I use whatever major news station, like for like those like breaking alerts, like something like a big story headline. If I want to read a story headline, I try not to look at the news, okay? Because most of it is bullshit. Most of it is bullshit. Okay, it's these news articles, a lot of them are AI generated. And if you actually notice, a lot of news articles, they get published, but then they get updated. Look at this. Published at 7:41 a.m., which was an hour ago, but they updated 14 minutes ago, right? Why? Because they probably didn't have all the right facts when they first published it, because now the news is about who's first. It's not about who's right. All right, so you notice that there's all these updates, and sometimes with the updates, it changes the story completely. Yeah. So that's why I don't like watching the news to begin with. I get a lot of my data, like my macro data. I actually get it from the Federal Reserve website of New York. So if you actually go to Federal Reserve New York branch, all right, there's actually a bunch a bunch of data, economic research, all this. I mean, you can literally study this for years, all right? Some of the best economic data is right here. Raw data is right here. Raw research reports, everything like that. You remember last week when I told you guys that that 90-something% of active traders fail? Well, guess what? The Federal Bank of New York collects brokerage data from the top brokerages in the US, and they report the average account size, the average account balances, the average number of trades, of winning accounts versus losing accounts. All of that is on here. That's where I get most of my data from, is the New York Federal Reserve. Also, too, the St. Louis Federal Reserve Branch operates a economic, what do you call it? Education site. It's called the FRED. Yeah, stlouisfed.org. The St. Louis Fed has something called FRED, which is the Federal Reserve Bank educational site. It's got economic data and everything like that. I use also a lot of FRED. So FRED and the New York Federal Reserve, and also my own brokerage that I use with IBKR. If you actually look at my screen right now, I have like interactive brokers right now up on my screen. So yeah, I use my brokerage data, which gets data directly from the exchanges. I also use the Federal Reserve of New York site, and then also the Federal Reserve of St. Louis site as well for a lot of my economic data. I get the raw data itself. I don't want some humanities majors interpretation using AI on what's going on in today's world. I don't think that's a very good idea. I don't like most financial media outlets. Most of it is fake. Most of it is bullshit. So that's why I don't like looking at the news. EU will see approximately $251 billion invested in nuclear power. Good. Finally. I hope they woke up to nuclear. They should. It's better than burning coal. Like, I don't understand. Like, oh, because of your clean energy like policies, you're gonna burn coal rather than nuclear. Get the fuck out of here, man. This is the dumbest shit ever. Europe, you need to reevaluate your energy policy. Anyway, you trade GC1? Yeah, actually GC1. So that's the gold futures contract. Yes, I do. I do trade gold futures contract. It's just that when we got into GLD options, I was trying to get in on GC options, the futures options. The GC is the gold COMEX futures contract, and they do have an options market. It's just there was so much volatility during that whatever I think it was like a Turkish central bank liquidation of gold. During that time, the spreads, the bid and ask spread on those options were so wide. There was so little competition in market making on those options that it was really, really hard to get a fill. Remember, I don't know if BZ is one of our other community members that trades a lot of futures options. We were up in the Discord, literally talking live with one another, saying how hard it was to get a fill. We could not get a fill on those GC options. So we were trying to play using options, and the GC options, the bid-ask spread was so wide that it was impossible to get a spread filled. So that's why we use GLD. GLD, the options are traded a lot more because there's a lot of more different like exchange market makers that are competing in those fills. So it was a lot easier to get a fill on a spread on GLD than it was on GC. That's the only reason why we went with GLD at that time. But yes, I do use GC a lot, and I do trade the GC futures options whenever I can get a fill. But again, precious metals markets can be very, very illiquid at times. They can be extremely extremely thinly traded at times. That's the only problem with GC. But yeah, I like the GC. I like using GC myself if I can get a fill. But it's hard to get a fill sometimes. Yeah, interest on interest is good for long-term savings. Yeah, interest on interest is good. Compounding, right? You know, if you make 10% on $10, you know, next year you're at 11%. I mean, I'm sorry. If you had $10 and you make 10%, you know, at the end of the year, you're at 11. You make another 10% on that. Now you're at $12.10. Ooh, it's not just $1 of gains, it's $1.10, right? So your gains make gains. It compounds. Yes, that's the power of compounding. And this is exactly why, if you're going to be trading, this is why I tell you guys, keep your losses small. Because if your losses are big, you stop that compounding phenomena, right? You know, it's that example I gave you guys last week. If you lose 10%, so if you had $100 and you lose 10%, you're at 90. You need to make over 11% to get to break even. If you lose 25%, you need to make 33% to break even. If you lose half, you need to double your money to break even, right? So this is why I keep telling you guys, and this is also why Warren Buffett always says the rule number 1 to investing is never lose money. Rule number 2, always remember rule number 1. You got to keep your losses small. The reason why you want to keep your losses small is because you have to be able to get to break even and make new money quickly. Because if not, time works against you. If you want time to work for you, if you want that compounding effect, you have to keep your losses small. You got to be able to make new money again within the next 2 or 3 trades. Okay? This is why it's so important to limit your losses. Keep your losses small. All of these little cliche terms that traders say, there is a reason why a lot of traders say that often, okay? Because if you want your money to compound, you have to limit your losses. You have to be able to create new money after another trade or two, right? After you take a loss, how long does it take you to get to break even? All right. If it takes you more than 2 or 3 trades to get to break even again, you are risking too much. You are losing too much per trade. All right. You are losing too much per trade in that case. All right. So again, risk management. It's all about putting the math in your favor. It's not about being right or wrong in world happenings. It's about putting the math in your favor. Very good point there, Sardine Sven. Increase your value, not your hours, and switching to call. Yeah. Brain code 100%. Increase your value. Increase your value 100% to that previous question. Increase your value. If you need to make more money, don't increase your hours, increase your value. I highly agree with that statement. Now, the only reason why I'm not harping on that so much is because you are young, you're 27, and just based on your hourly rates, I'm not even sure what type of job you're in, but your job may not have that ability where you can increase your value that quickly. I mean, you know, and again, like you find your way to increase your value, right? Like if you're working at a restaurant and you're like like a line cook or something like that, maybe you can increase your value and become like a manager, a shift manager, or you can become like the head chef or something like that, right? I'm not sure. I mean, you know, again, apply it to your own situation. But yes, increase your value, and really, your time is the most valuable commodity that you have. It's important enough for me to say it again. Your time is the most important commodity that you have. If you give all your active hours to somebody else to make that wage, you're using up all of your time. And the thing is, if you lose money, you can always make your money back. If you lose money, you can always make your money back. There's a lot of money in the world, all right? But when you lose time, you can never get that time back. It's the only commodity when once you lose it, you will never get it back. Time is the most important commodity you have, so spend it wisely. Yes, work at your job. You need to get that income, but also use your time outside of your work to grow in a way where that's like the best thing I can say. You know, it's like, it's just one of those things. It's just one of those things. Yeah, you got to be able to, you really got to be able to, you know, you got to be able to work around that. I know it's easier said than done. I mean, there is no playbook for this. Yeah, everybody's life is different, so everybody's playbook is extremely different when it comes to this. So, and it also depends on your industry. It also depends on like what you do. And like, you know, all of these things matter. So it's not like, you know, it's tough. Okay. I'm not trying to like lessen your like, you know, your situation. You know, it's tough. It's not easy. I get it 100%. I get it 100%. All right, guys. Well, in that case, I think that's all the questions. I don't know if any of you guys have any other questions. You guys have any other like, you know, things you guys want to talk about. But I think this was a great session. Let me just look through our Discord and see if there's any other questions that people posted in there. I'm sorry if I got to your question a little bit later than usual. It's just because I actually had a lot of people messaging today. So there's a bunch of messages from many different sources. People typing in from Twitch, from TikTok, from YouTube, even in our Discord. So lots of people from different social networks reaching out. That's good. It's good to see that. Okay, I don't see any other questions. I don't see anything else. All right, well, guys, this was a great session. And as always, Mondays and Thursdays at 7 a.m. Eastern, you know we're going to go live here from Money Maxxi, trying to get your money right and all that good stuff. Guys, the markets are ripping. Risk assets are going to the upside. It looks like S&P 500 is holding on to some gains. Also, too, our gold position is doing really good right now. Our gold position is up 131%. Yay, yay. Let's go get that money, guys. And hopefully we see a little bit more volatility so we can get in on some of these other names that we're trying to get into, Brazil, Mexico, all of these things that we talked about here on Money Maxxi. Guys, if you have any questions or if you want me to answer any questions or address any concerns that are money related, financial related, trading related, you guys can always DM it to me on my Discord. You can DM it to me on YouTube, on all these other social media platforms. You can DM it to me on X. You can even come through the Discord and type it in the Discord. All Discord access is free. I do not charge a dime for any of this stuff, and I will never charge a dime for Discord access. So you guys are always welcome to come by and talk shop with us. Anyway, guys, this was a great session. Thank you guys for being here. You could have been anywhere else in the world, but you decided to be here with me, and I do appreciate that 1,000%. Who fucking loves you, baby? You